Hey, Kevin here, top 100 financial advisor and best-selling author, and we are here to talk about the stock market. Now, this just happened, so we're gonna take a little bit of an audible because I like to record these at night when I think the news is over to report to you guys and tell you what's going on. So there are a lot of things that are going on in the market. The last 3 weeks or so have been really, really rough. Now, some of this is to be expected to a degree. We know September, sometimes October, they can be a little meh. But the last few weeks, it's been a lot of really tough issues that have all hit around the same time. And I want to take separate videos to break each of those problems down. But again, these things are constantly moving. And as I was recording, it's 8:47 right now. Just got an update from the Washington Post. And this is about one of the biggest issues that the United States might be going broke, or at least defaulting on a debt payment, and that ain't never good. And then if we don't get this stuff passed in time, which I think the deadline is September 30th, then we go into the government shutdown, which is not what you want when you just had a hurricane and you need funds, when you're still in the midst of a pandemic, and it's just not the place that you want to be. Now, there's some good news here. So number one, good news is the House just passed, since 1 minute ago, according to my phone, the House just passed a bill to avert a shutdown, to suspend the debt ceiling. We'll get into that when we do a separate video on it. And legislation is now moving to the Senate, but it looks, quote, grim. So that's happening. So that's one of the big things. Then you had a Chinese bank or firm or something, again, I have to look into that as well, where they have collapsed, kind of like a Bear Stearns situation, and that's a lot of money down the drain. That's going to have an impact on the market, and it already has had an impact on the market. Then you've got like the eviction notices, or the ban on evictions that we did have for COVID. All of those benefits and stuff, those are expiring here pretty soon, and then you're gonna have a lot of people in a lot of trouble. And this, plus the debt ceiling stuff for the government, plus the Chinese stuff, plus it's just September, all these things hitting at the same time, and the market has just not been all that great. So I want to break a few of these things down, give you some tips and things that you should be doing and be aware of. So number one, I've heard and read a bunch of gloom and doom. 250 years, that's how long a civilization can last before it collapses, and that this is the end. And that's not the case. Now, I'm not saying the situation is good. I don't think it's good, but the last 3 weeks or so, the market's down 2%. If I look at year to date, which is from January to now, the market's still up double digits. So we're not at that phase of the end of the world as we know it. You remember, last year, 18 months or so ago, from March to April, the market was down 38%. You have literally been here before, and we're still here, okay? Again, all this stuff that's happening is not great. We'll break it down, we'll talk about it, figure out what we need to do, right? But this isn't over, and I think this is where you want to reset your perspective. And this is tip number one, is reset your perspective, and that's what I'm looking for, perspective and outlook about investing. Because the way that I view it, and the way that I told you guys all last year in 2020, and really even before then, was that what I'm doing in 2021 is setting me up for 2022 and 2023. That's the goal. The companies that I'm picking now, the things that I'm investing in, is to grow my money, so that when I come on video this time next year, right, I've set myself up. I'm like, man, this was really good. A great case for me is Adobe. I invested in Adobe in 2020. And now in 2021, I can look back and say, damn, Adobe has done really well since then, right? That is the point. You want to plant the seeds now, so that whether it's 6 months for you, whether it's a year, whether it's 10 years for you, whatever it is, that you're sitting down, you're planting the seeds. So if those seeds just happen to be cheaper today, and it might be a rainy day today, or it might be stormy, or whatever the weather is right now, I'm not overly concerned about what's happening now, because my goal is not make profits right now. My goal is to get what I can, choose quality companies, so that years from now, that is going to be quality and it's going to pay off. That is the point. And that is one of the things that you should employ, and to help you to be okay, and to be solid, and to really weather these storms, and continue to invest in some cases. Just like I did last year, just like I did the year before that, and really my entire investing career is I'm dollar cost averaging. I'm putting in money. I don't care what the market is doing, because whether or not the Chinese bank thing is a big deal, whether or not the debt ceiling is a big deal, whether or not the COVID restrictions and stuff, goes through or doesn't go through, is the company that I invest in, is that going to collapse? Is there a problem with the company itself? If the answer is no, then I really don't need to be concerned, right? Like what I've been telling you, one of my favorite stocks is Google. So nothing to do with Google. What are we gonna do about it, right? So it's because it's not company specific and it has nothing to do with the company itself. There's no genuine threat there, or at least not an immediate one. Then I don't need to be overly concerned about it, and I don't need to change my investing approach because of that. This is fear, uncertainty, doubt, what people call on Reddit FUD, that I don't really need to concern myself with. It's important for you to know. Okay, it's important for you to know. You don't want to ignore it, but from your investing perspective, you read, you research. I knock something over. You read, you research, and say, all right, well, I'm not impacted from an investing perspective, or no, I wouldn't say impacted. It doesn't threaten my company. The company is still good. It just happens to be cheaper. Maybe this is a buying opportunity. Maybe. Okay, so that's number one. Number two is remember that you do still have what are called stop loss orders. It's one of my favorite techniques when it comes to my shorter term investing approach. I don't do a whole bunch of short term trading, but I do some. For example, I told you about PayPal. PayPal, I still think is a good company. Okay, like if I were holding it long term, I already hold Square, so I don't think it's best for me to hold both. But I told y'all weeks ago, maybe even a month ago now, I liked PayPal. I thought I got it at a good price. I thought I was gonna, kind of go up and down and really hit my price target of $325. I thought it would hit there between, I think it was like 4 to 8 weeks or so, right? That's what we said at that point in time. Well, I had a stop loss at $375. I got in at $288. I was gonna get out at $325 if things went the way I wanted to, but if things didn't go the way I wanted it to, which I did not expect, but hey, it happened, it went down to $275. I got out and I saved the rest of that money because I don't know where PayPal is going now. I don't know what the market is doing right now. But guess what? I'm not along for that ride. So if you're interested, or if you have shorter term trades and you know that you're not going to hold on to it for the long term, do consider those stop loss orders to protect some of your gains. If you've already gained, you can put that stop loss order and say, look, if the stock comes down to this point, it is going to sell on its own. You don't have to worry about it, and you are going to retain those gains and go about your business. If you are in a short-term trade and you're like, I don't want to lose all of my money, then you may want to consider that. I don't really use it for my long-term stuff because that would be something that's catastrophic, right? For example, I mentioned Adobe. I think I'm up more than 30% on Adobe. I have no idea how much I'm up. I was like 80 something percent on Google or whatever it is when I started investing, at least on public. For it to drop 88% is something absolutely ridiculous. So I don't want to put a stop loss there because I'm going to have it for years and years and years anyway. The disadvantage of doing it for your long-term stuff is if you sell out of it and then let's say a month later it shoots back up, then you have to buy it at a higher price. That doesn't really help you. So it's really for short-term stuff. If you got some stocks you can't trust, if you got some short-term stuff, put a stop loss on it. If it doesn't hit the stop loss, good. The stock didn't fall. If it does hit the stop loss, perhaps you save yourself some money. Perhaps you've kind of cut your losses, which is what a stop loss order does. So those are two things. Change your perspective and relax. Number two, check out stop loss order. And then the third one, and I think I want to do a separate video on this as well, is real estate investment trust. REITs, R-E-I-T, might be a place that is somewhat of a safe haven right now. Real estate investment trusts are investments very, very similar to stocks where they hold physical, tangible assets. For example, one of my favorite, AMT, that's American Towers REIT, again, AMT. And what it does is it owns the land around cell towers. Regardless of what happens, you're going to be on your cell phone. Okay. And that's been, I'm not going to say it prints money, but it's been a very solid REIT for quite some time, pays very high dividends. So I'm going to do some more research into that and really kind of test that theory even more. But that might be a place where you want to kind of get a head start and look into some REITs to kind of protect a little bit of your gains, or at least kind of get some more, get a higher dividend as well. So those are my 3 tips right now. Relax, change your perspective. Okay, if you're new, you just started investing, you're really not investing for right now. You're really not investing for like what's happening in 2021. 2021 is almost already over. I'm already looking at 2022. What I'm doing now by minding my business, not freaking out, is to set myself up for 2022 and 2023. When I sit down and reevaluate my portfolio at the end of December, that is to set me up for 2022, right? And in the middle of 2022 in June, we say, okay, do we need to make any tweaks? I need to put more gas in the car, do the regular maintenance, and then we keep rolling. That's what we do. You can add a fourth one here, and that's to have a plan. I've already told you with the stop loss, I had a plan for PayPal. If you've been watching these videos consistently, you know what the plan has been this whole time, right? You need to have a plan too, because I can't tell you when to buy and sell. I can't tell you that. One, I don't know what your goals are, but two, there's so many factors. I don't know what your price point was, what your goal was, what you're trying to do, how you react to losses. I can't tell you that, but I'm telling you, you need to have a plan for what you are trying to do, and then execute that plan and stick to that plan. When you don't have a plan, you act crazy in times like this. When you have a plan and the market drops, you get loud, you get upset, you panic sell, and then when the market is back up, you're like, oh, I should have kept it where I kept it at, right? Or I should have bought low. You have a plan, right? So you need to make sure that you have that. So those are my tips. Let me know what you think in the comments. I got a lot of research to do now. I feel like I'm out of breath because I'm like, my phone is blowing up for all these other notifications for what's going on. So I got some homework to do. I'll look into REITs. I'll look into this debt ceiling thing. I'll look into this China thing and figure out what that is. And then figure out which one of those COVID benefits is expiring and what the risk could be. So I will talk to y'all later. Let me know what you think in the comments. And that's it for me. Peace.